Why should investors consider investing in stocks when bond yields are higher than inflation? First, let's think about what your goals and objectives are. Is it just to beat inflation? If so, holding some bonds with a higher yield than inflation is a fine enough idea, but remember, you're going to have a bond strategy that stays above inflation over time. It could go higher than those yields. Are you going to lock in those yields? In other words, are you going to hold some debt for 10, 20, 30 years to maturity, and are you really prepared to do that? Remember, interest rates will change, so will the inflation rate. And at some point, you might get caught up in all this. Stocks historically have been one of the best ballasts against inflation. Now compare that to bonds. When inflation goes up, interest rates tend to go up. And what does that mean? The bond prices tend to go down. Is that a great ballast against inflation? Well, it can be okay, but I don't think that's necessarily what people have in mind. What they're really looking for is to protect themselves from inflation, and then most investors I know, of course, are trying to get a little growth out of their investments as well. Nothing is better than the stock market for fighting inflation in that way.